Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. It was announced today that Amazon is going to lay off 10,000 employees, which could be one of the biggest layoffs in U.S. history. Obviously, this is not great news, but the more I looked into Amazon, the more I looked into the story, I realized that Amazon is not a good business. And yes, we can talk about all the ethical problems with Amazon, but just from a financial perspective, because for years now, Amazon was perceived to be invincible. And there's still a case that you can argue that, but I want to take you through some of the numbers and then kind of walk you through what we thought about Amazon and then what we know about Amazon as it is today. So first, when I say we thought it was invincible, there used to be a term called FANG, and these were the top, let's say 4 or 5 most popular companies, and they were all in the tech space, and they were all generating 20, 30, 40% for investors consistently every single year. And then 2020 hit, and then things got even better for those companies. And then everything started to fall apart in 2021, and then even more so in 2022. Those companies were Facebook, Amazon, Google, Netflix. That was primarily the FANG companies, and you can throw in some other ones here and there. And it was, at that point in time, it was like, hey, look, everybody needs to have these companies. This is what's going to make you obscenely rich. And if you had invested in these companies from 2010 to 2018, or even from, let's say, 2010 up until 2021, you might be pretty good. And that was relatively true. And some of these companies will continue to do well, in my view, in the near future. Some of them may not. Now, we have seen Netflix kind of teeter back and forth, where Netflix used to be, in my view, the butt of many jokes because they were losing subscribers, things weren't going well, and then behind our backs, Netflix is up 50%. Now, whether you want to invest in that company or not, that's totally up to you. We've seen Meta, which was the F in FANG, which I guess, was Facebook, now it's Meta, so I don't know how we want to redo that acronym, but that has absolutely turned sour. We will see where that's going to go. People are not as enthusiastic on Instagram and Facebook as what they used to, but now Twitter is falling apart, so they may not be a competitor, but now TikTok is out there, and it is a major competitor. We'll see where they go. I'm kind of on the fence. I personally right now, actually I'm not on the fence. I'm selling. I don't know. I'm on the fence on whether or not they're going to be the Meta of old or the Facebook of old in terms of how well they're going to do. And they've also have stated they're going to do layoffs too. Aside from all of this though, let's kind of circle back to Amazon. They're laying off these individuals. We understand why, because interest rates are going up, money is more expensive, and Amazon did overhire in 2020 to kind of cope with the pandemic. People were ordering left and right. I had never spent so much money on Amazon until I was at home, had extra money because I wasn't driving to and from work. I wasn't paying for daycare. I wasn't paying student loans because those were on pause. So I had a lot of extra money laying around, and Amazon is just where some of that stuff went. And they had to hire more people to do deliveries, to do all the back end stuff. And those orders have slowed down to a degree. Yes, we are still going to holiday season, but the money that they were getting has not kept up to what they were seeing previously. And most importantly here, their costs have not come down. And this is the problem. Not only are they laying off 10,000 people, which is tragic, especially going into holidays. I think that is terrible. I also noticed, if you've seen this on Twitter, oddly enough, when they announced this bad news, they also announced, Amazon announced one thing. Jeff Bezos comes out and says he's going to donate his $120 plus billion fortune on the same day. He says he's going to donate throughout his life, which as many billionaires have also pledged to do. But it's just like, y'all are obviously kind of covering up, some pretty bad news. Aside from all that though, here's the thing. And for those listening to the podcast, I'll read off some of these numbers. And then for those who are watching on YouTube, I'll show you these numbers as well. But again, here's the thing. Their operating expenses have really kind of gone up in a straight line. A part of this is just because things are more expensive due to inflation, and then also due to having more employees, and also these acquisitions, right? They bought Roomba. They bought MGM Studios a while back. Those things cost money. So just take a look at how this is consistently going up. And for example, if you are looking at, let's say, let's say Q4 of 2018, their total operating expenses, the money that it cost for them to run the company, was about $23 billion. If I skip forward to Q1 of 2020, we're looking at $27 billion. If I'm moving over into Q4 of 2020, we're at $39 billion. So you can see 23 and then start to creep up, then it's closer to 40. If we skip to Q3 of 2021, we're looking at $43 billion. And then if you go to the most recent quarter, which is Q3 of 2022, you look at $54 billion. In 4 years, you went from 23 to $54 billion. Your costs have doubled in basically just 4 years, and the money that you're keeping after all that has not done well. So for example here, and I'm going to put this up on the screen for those who are watching on YouTube, for those who are listening on podcast, again, here's what's going on here. For example, if we are looking at, let's say, Q4 2022, or I'm sorry, of 2020, their net income, this is the money after they've had everything, after they've paid all those expensive bills, they had about $7 billion left over. That's profit. That's nice. Okay. You got $7 billion. That was around the average. They had $8 billion in net income in Q1 of 2022. And then they had an explosion at the end of 2021, $14 billion in net income. That's awesome. It's the highest that they have had in the last almost 5 years. And then things dip. Starting in 2022, Q1 of 2022, they had a negative $3 billion net income. So you were profitable, $14 billion. That's awesome. That's great. It feels good. And then you're negative 3. Then the next quarter, you're negative $2 billion. And now the most recent quarter, Q3 of 2022, you're at $2.87 billion. So notice here, your costs have doubled. Your revenue has really fallen off, and it's kind of reverted back to the mean. So for example, the most recent quarter, again, Q3 of 2022, was $2.87 billion. And if you go all the way back to Q2 of 2019, I'm doing a lot of dates here, I'm sorry, but Q2 of 2019 was 2.63. So you're kind of going back to normal. Your net income, the money that you have after all the bills are paid, are coming back to average, maybe $2 or $3 billion per quarter, but your costs have doubled during this time, and they're not going down. And there's really, in my view, unfortunately, outside of cutting staff, because it's usually the most expensive part of any business, outside of cutting that, there's really no way that that's going to slow down, because, fuel prices, Amazon has to get things from point A to point B all across the world, and things, again, are getting more expensive, which is one reason why I did raise the Amazon Prime price not too long ago. I think like last year they rose that, and this was a part of that. So this is a problem for Amazon. Your costs are far exceeding the value and the money that you are pulling in, and they're spending billions of dollars to acquire all these other businesses to become this mega corporation. Yes, they have AWS, that is the best, most profitable part of their business, but it doesn't even make up 50% of their revenue the last time I checked. That's something that they are going to have to consider and fix. So for me, I told y'all this. I sold off close to half of my Amazon holdings last December, if I'm not mistaken. And you guys can go back and check that video to just verify that. But I know for a fact I sold off half back then. I have not dollar cost averaged into Amazon, at least in my memory. And I am very close to considering selling the rest of my shares because of this structural problem with the company. There's a possibility here that by cutting 10,000 in staff, which is obviously going to make your books look a lot better, your expenses are obviously going to come down a bit. And if you keep bringing in the same amount of money, you're going to look more profitable. You're probably going to look healthier on the financial side. And that's okay if that's all you're looking at. But Amazon hasn't done well, and I've said this for a while. They haven't done well for a while. This is not a 1 year blip. In 2021, the stock didn't do well. If we're looking at the last 6 months, the stock is down 12%. If we're looking at over the past year, it's down 44%, which is more than the entire stock market. It is moving in a negative direction. Now, I want to be very careful here because it's Amazon. It has such a history, and it has the quote unquote power, right, that an Apple has to some degree, or an Alphabet has to some degree. You can't necessarily write it off and say this company will never return and it's never going to go back to what it was between 2010 and 2019. Okay, I don't want to be an alarmist here and say that the company has changed forever, But I do want to say the money has changed. It is not as profitable as it would have used to. And even if it is, it's average profitability, because if you take out 2020, that's obviously an aberration year, right? There were special circumstances as to why they made $14 billion at the end of the day. That's not going to return. So if they go back to their average net income and their costs are still high, that's not going to end well for the company, and it has not done so. So this would concern me if I'm an investor in Amazon. For me, I'm at like a 70%. I'm probably going to let it go along with Meta at the end of 2020. Could it be a good stock in the future? Maybe. And if it is, we'll come back and look at that. But until then, I got my eye on a lot of these auto companies that I've mentioned before. I got my eye on healthcare that we've mentioned before. And I have my eye on one particular financial stock that has surprisingly done well, and we're going to talk about that inside the members only, in addition to the 10 stocks that we had covered previously in terms of those that pay great dividends and have done incredibly well in 2022 and will likely do well in 2023. So that's inside the members only. You definitely want to join, especially this week. I'm going to walk you through a few trades I did last week that were quite profitable and show you exactly how I pulled that off. In addition to showing you how you can make money when the stock market is down as well, even though the stock market has been pretty good the last week or so. I want to be able to show you how to make money when things are good and things are not so great, because there are several indicators out there at this point in time about how doom and gloom 2023 could be. And it could be. Honestly, I don't know. We did see an expansion where the economy did grow in the last quarter. So I can't call it, right? That's how my cousin would say, I can't call it, man. I don't know what's going on with this recession and whether or not it's official or not, or what's going to happen in the future, because there's a bunch of mixed signals. But this is concerning to see one of the world's most valuable companies cut 10,000 people. That's not great. Also, if you look at who they're cutting, that is something that is a little concerning too, because in most cases you would think that they cut the lower level employees, which is not great to say and it's not fun, but you would think they're cutting warehouse workers and everybody else in the quote unquote C-suite, everybody who doesn't do all the hands-on work, are usually pretty safe. That's not the case this time. Amazon is cutting people in that middle tier and sometimes in that top tier too, which does signal that this is something that's pretty drastic and pretty big, and something that should at least raise an eyebrow, because again, once Amazon starts cutting people, and we know Twitter is doing its own thing, but things are moving, and this is an unfortunate circumstance of raising interest rates, and it is painful. This is what the Fed chair says when he's tried to go for a soft landing, and there's going to be economic pain. This is a part of it, because when you make money more expensive, you have to stop demand, and if people aren't going to stop demand on their own, meaning just sit at home and not buy, they're going to continue raising rates to make things, unfortunately, I hate to say it, but unfortunately hurt. And this is a part of that, and it is going to continue with more companies unless supply catches up, which that would be the best way to do it, but the Fed doesn't control that. Unless supply catches up, this is the other way to bring things down to a level where inflation is acceptable, back at 2% and not the 7 or 8 that we may be in right now. So that's my update on Amazon. Again, not a fan. I'm never a fan of laying off people, but not a fan of how they've been running the business really since Jassy took over. That's the new CEO that took over, I think, in 2021. Yeah, I think late 2021 or mid 2021 is when he took over. I haven't been a fan of how things have changed for Amazon, and just kind of sour on it as a whole. But let me know what you think. Yes, Amazon has a future, okay? I'm not here to say never invest in it. You can see this as a buying opportunity. That's totally up to you. But for me, there are a bunch of other companies out there that are doing quite well right now and will continue doing well and have run circles around Amazon in the recent past. So let me know what you think about Amazon in the comments. Again, you definitely want to make sure that you check out the members only. I show you a few videos on how you can make money when the market is down, as well as 10 stocks that work right now. If you are new to the channel, you probably saw me point to a video that had like 6 or 7 on there. I gave you some bonus ones, so I can count. If I can't do nothing else, I can count. So that's why you guys saw that there. But again, check out the members only description. There's a link in the description as well as a button right below this video. All right, that is it for me. I'll talk to you later. Bye.